Hey everyone, and welcome back to the channel. Today, we're tackling a topic that's essential for financial success, budgeting. But not just any budgeting. We're talking about budgeting for different income levels, because a budget that works for someone earning minimum wage will look very different from one for someone earning six figures. So, whether you're just starting out or looking to refine your current system, this video is for you. We're going to break down budgeting strategies for three main income categories: low income, middle income, and high income. Remember, these are just general guidelines. The most important thing is to tailor your budget to your specific needs and goals. First up, let's talk about low income budgeting, where the focus is on survival and stability. If you're in this bracket, budgeting is absolutely crucial. It's about making every penny count and prioritizing your essential needs. Low-income individuals often see 70 to 90% of their income consumed by essentials, with an average of $25,000 yearly spent on housing, food, and utilities alone. A key strategy here is the zero-based budget, where every dollar you earn needs to be assigned a purpose, whether it's rent, groceries, transportation, or even a small amount for savings. The goal is for your income minus your expenses to equal zero, ensuring you know exactly where every penny goes. Next, track everything. Use a budgeting app like Mint, a simple spreadsheet, or even a notebook. Knowing where your money is going is the first step to controlling it, especially when margins are tight. Focus on needs, not wants. This is where you really need to be honest with yourself. Prioritize rent, utilities, food, and transportation. Luxuries will have to wait. For housing, aim for rent under 30% of your income. For example, $800 a month on a $2,500 monthly income. You can use tools like HUD's Fair Market Rent to find affordable options, with the average two-bedroom in 2023 costing around $1,200. For food, budget around $300 to $400 a month. Meal prepping can save you 20 to 30% by buying in bulk at stores like Walmart or Aldi. Consider a weekly meal plan under $50 per person. And don't forget about SNAP benefits, which average $250 a month for eligible families. Transportation costs can be managed by opting for public transit or used cars. A $200 monthly bus pass is often far more economical than the $10,000 annual cost of car ownership. When it comes to savings and debt, start by building a $1,000 emergency fund. Even if the goal is 3 months' expenses, begin with $500. For high-interest debt, like the average $6,000 credit card debt, use the debt snowball method to pay it down strategically. Find ways to increase your income. Explore side hustles like gig economy jobs, which can average $15 an hour. Look for opportunities for overtime, or consider upgrading your skills to qualify for higher-paying jobs. Finally, don't be afraid to seek assistance. Government programs like the EITC can offer up to a $7,430 refund for low earners. Local charities can also help with food, housing, or utilities, providing a crucial safety net. It's important to acknowledge that 40% of low-income Americans live paycheck to paycheck, making these strategies vital for financial stability. Now, let's move on to middle-income budgeting, where you have a bit more flexibility, but budgeting is still incredibly important. This bracket, typically earning between $60,000 and $80,000 annually, is about balancing your needs with your wants and building a solid financial foundation. The 50-30-20 rule is a popular guideline here, popularized by Senator Elizabeth Warren. It suggests 50% of your income goes to needs, 30% to wants, and 20% to savings and debt repayment. It's a great starting point. But remember, you can adjust these percentages based on your personal priorities. An emergency fund is a must. Aim for 3 to 6 months of living expenses, which for middle-income earners could be $10,000 to $20,000, in a readily accessible savings account. This fund will protect you from unexpected expenses like car repairs or job loss, providing crucial financial security. For debt management, develop a plan to pay down high-interest debt, like credit cards or student loans, which average $37,000. Consider methods like the debt snowball or avalanche, and explore refinancing student loans to lower interest rates, perhaps from 6 to 7% down to 4 to 5%. Invest for the future by contributing to retirement accounts like a 401k or IRA. Even small amounts can make a big difference over time. Many employers offer an average 4.7% match for 401k contributions, essentially free money. Automate your savings and consider contributing to a Roth IRA, with limits up to $6,500 per year. Regularly review and adjust your budget. It isn't set in stone. Review it monthly or quarterly and make adjustments as needed to stay on track with your evolving goals. Finally, let's explore high-income budgeting, focusing on optimization and legacy. Even if you're in the high-income bracket, typically earning over $150,000, budgeting is still crucial for maximizing your wealth and achieving your financial goals. While you can afford luxuries, the risk of lifestyle inflation is real. The top 10% holds 70% of U.S. wealth, so smart budgeting is about growing and protecting that wealth. Focus on long-term goals. Think about your big picture: retirement, investments, real estate, or starting a business. Your budget should align with these ambitious goals, acting as a roadmap to your financial future. Maximize investments. Work with a financial advisor to develop an investment strategy that suits your risk tolerance and financial goals. Max out your 401k contributions, which are $22,500 in 2023, plus an additional $7,500 catch-up if you're over 50. Diversify into stocks like the S&P 500, which averages a 10% return, and real estate. Tax planning is critical. High-income earners often face complex tax situations, so consult with a tax professional to minimize your tax liability. Estate planning is also essential. If you have significant assets, it's important to have an estate plan in place to protect your wealth and ensure your wishes are carried out. Consider charitable giving. Incorporating philanthropy into your budget can provide both personal satisfaction and potential tax benefits. No matter your income level, budgeting is the key to financial success. Find a system that works for you, be consistent, and don't be afraid to ask for help. What are your favorite budgeting tips? Let me know in the comments below. And don't forget to like this video, share, and subscribe for more financial tips and tricks. Thanks for watching.